Well, thank you to all of you. It looks like you are the hardcore blockchainers of this conference because you are here at 5 o'clock. So a rousing thank you to all of you. I'm Rick Levin. There we go. I'm Rick Levin. I'm the chair of the FinTech and Regulation practice at Polsinelli, which is a national law firm. And I have to admit, I've been doing FinTech for 20 years. I got into this 3 years out of law school, quit a job and joined a trading firm that wanted to be a stock exchange, and then worked on Wall Street my whole career building trading platforms. And 8 years ago, when I left Wall Street and had 0 clients moving back to Colorado, I read the Satoshi Nakamoto white paper. And I said, wow, this sounds interesting. Called my dad, a professor of computer science, and he said, yeah, son, sounds pretty cool. Sounds like an Excel spreadsheet in the cloud. So I got into it and started focusing on how the heck this stuff was going to be regulated. So I'm very happy to have a great panel, and we're going to talk about the future of FinTech, and we're all going to get to put on our Nostradamus hats, and I'm going to ask each of the panelists to introduce themselves.
Hi, I'm Bernadette Kogler. I'm co-founder and CEO of RiskSpan. We are a data management and predictive analytics firm here in DC. Roughly 2 years ago, 2016 actually, a little longer than that now, we set up an innovation lab at RiskSpan to focus specifically on data validation tools and process automation tools that ultimately will feed into smart contract and blockchain technology.
Well, I'd like to thank the Chamber and Perry Ann for having me, and Rick, for you to be the moderator for this great event. And I really am amazed that you're all here. It's late, so thank you all for being here. I'm Lynn. I'm the Vice President of Engineering in Cisco. The areas I focus on are innovation, quantum networking, and identity. Prior to this job, I was working in the Department of Defense, former general officer. The last job I had was in the Defense Information Systems Agency. I was running that organization. It's a $24 billion network that interconnects Army, Navy, Air Force, and Marine Corps, runs the G route to the internet, does a number of things with identity, and I'll talk a little bit more about that. Also, cyber defense for all of the Department of Defense. So that's kind of my background.
That's hard to follow.
Yeah.
My name is James Putra. I'm with a company called TradeStation Crypto. You may know the brand TradeStation. The overall brand is an online retail broker focused on direct market access, multiple asset classes, futures, equities, options, futures options. My job under the TradeStation Crypto portion of the company is to lead our charge into the digital asset space. This, like my career in FinTech, was kind of an accident. I was running the innovation lab for TradeStation, and we just sort of fell into cryptocurrency. We were talking about this backstage. We were at the MIT Media Lab in 2014, and we saw a presentation on blockchain. In the same presentation, we saw a Skype session where you could shake somebody's hand in Japan. We also saw a camera that could read a book without opening it. So we left there thinking, it's all future Star Trek stuff. We're never going to use this. And I kind of fast forward, we learned how to do mining, we learned how to do custody, we learned how to do trading. And so now they spun me out of the innovation lab, and I'm running the business to actually bring digital asset classes to TradeStation as an overall product offering.
Okay. So it's always instructive just to ask, how many people in the audience after 2 days here know what blockchain is? Just by a show of hands. Okay. And how many of you actually own cryptocurrency, digital assets, illegally offered securities or commodities, whatever you want to refer to it as? As the lawyer, and I promise I don't believe there are any more SEC people here or CFTC people.
They all left.
They all left. They're gone. Okay. So as we talk about this, Bernadette, we hear people, when I got into this 8 years ago, people said, oh my God, this is going to destroy central banks, clearinghouses, stock exchanges, topple governments, cure cancer and solve hunger. And I thought that was a bit pie in the sky dreaming. But do you think that there's a potential for blockchain to disintermediate traditional players in any number of industries? And if so, why?
So I've spent the bulk of my career in the mortgage and structured finance market. So everyone remembers 2007, 2008, and the crumbling of the financial system. So What we deal with in our markets are three main problems, how I think of it. Number one, nobody trusts the lenders. The data is unreliable, and there's a massive misalignment of incentives. So what happens today, in today's world, outside of blockchain, is there's probably, in a typical structured finance transaction, there's probably 15 or more intermediaries or roles that institutions play. Half of those are likely just there solely to validate a piece of data, validate that a document actually exists, that a signature actually exists where it's supposed to be, and all of those intermediaries throughout the process are extracting profits along the way. So what blockchain and automation, we don't think of just blockchain, it's blockchain plus automation, will enable the market is actually to scale. So today, just as an example, a lender will underwrite a loan, a car loan, a mortgage loan, what have you, in the consumer markets, and then an investor wants to purchase that loan either as a whole loan or as a secured asset, a securitized asset. So what they do is they actually pay someone called a due diligence firm to re-underwrite that transaction at an expense of roughly $600 to $1,000 per loan. So it's incredibly inefficient, it's very expensive, and that's just one example of the process. So again, what blockchain will enable ultimately is trusted data, transparency to the end investors, and a scalable business. So we do think what will happen is disintermediation. That will happen. That's not, the reason we're approaching this, the way we think about it, is that securitization can actually finally achieve what it was ultimately intended to do in a scalable way, which is the redistribution of credit risk.
So, I'm going to show my age. I remember my wife's first job out of college was the Resolution Trust Corporation, when all the savings and loans failed. And a lot of people got paid a lot of money right out of college to just crunch documents. If we put this stuff on blockchain, do you think that's going to help to relieve some of that, need for that type of work? Are we going to automate it all? Is it going to be more efficient in the future if we have another type of failure like the S&L failure or the financial crisis in 2008?
To the extent that you actually have a single source of truth, then it will certainly help. It's not going to solve every remediation issue that continues to exist. So I'm not suggesting there won't be a need for accountants or lawyers, right? But roles will change. So a corporate trust, for example, or a document custodian may change their role or how they process documents. A lot of automation will solve those things. So in today's world, the private label mortgage-backed securities market has not. It's still practically non-existent, I believe, largely because there is no trust in the system or between counterparties, and it's inefficient. So when you think about housing finance specifically, Fannie Mae and Freddie Mac here in DC, as you all know, they are paid by investors to guarantee mortgage credit risk. So what most people might not focus on is that fee today, called the guarantee fee, is roughly 55 to 56 basis points. 10 years ago, pre-crisis, it was 15. So when you begin to think about the combination of where housing finance is today and extracting those excessive costs out of the private label market, it begins to look really interesting what could happen in mortgage finance.
It's funny that you mentioned getting rid of lawyers. I tell the young lawyers in my firm that for those of you that remember the old Star Trek, the young men usually in the red suits who were vaporized by the aliens, I tell the associates that we actually don't need them. Technology is going to replace them, but we need them to keep our insurance costs down. So the older, fatter lawyers in the firm, which now include me, that we hire them in order to help bring our insurance costs down. But I do see that type of disintermediation coming to the legal profession and other industries. But as we look at this, James, will traditional financial markets, if we're talking about disintermediation, we're talking about change, are traditional financial markets and the digital asset markets going to come closer together? Are they both going to evolve separately? How do you see that shaping up in the next couple of years?
So I think it's an interesting question. If you look at the promise of blockchain, we thought this was going to create a parallel financial system and basically shut everything down. And a lot of people ran down that direction to try to create this alternative financial system. And it turns out it didn't shut it down. It turns out it turned to be a great incubator for this technology and this knowledge base. And what happened was all of these people ran down a path to create a financial system. They realized that they weren't able to do it without the domain knowledge of the traditional financial system. So what did? They pulled all the talent out of Wall Street, or as much as they could get. And at the same time, the main Wall Street banks and financial institutions realized that things are changing. Markets are moving 24 hours a day. Asset silos are not going to be really well received in the future. The new customers are coming in expecting to be able to have access to asset classes around the world. And so they need to change. They're losing talent. They need to evolve. So to your question, I think they come together and they are codependent on each other for survival. The new financial system needs Wall Street and big banks to be able to validate as well as provide expertise. And then the Wall Street needs the innovation of the blockchain to be able to drive out costs and make things more transparent. To your point about the mortgage finance, if you look at what happened in 2008, the banks are moving things off their balance sheet, reporting earnings and moving it back on. That can't happen. I mean, we need to be able to trust in that, and providing some level of information on blockchain and some type of transparency will definitely help that. In terms of how this is going to evolve, if you look at the digital asset space now, I think you heard from Fidelity today. TradeStation also we're here talking today. Ameritrade's also getting in this space. So together, those are three major retail brokers in the U.S. We represent about $2.2 trillion in customer assets. It's changing the way that the market structure works. So when somebody wants to work with us, if they're a market maker or an exchange, we're not going to work with you if you want us to communicate with you over Skype. It just doesn't work. Like our brands, we are expected to provide a specific type of experience to the customer. So we require a few different things. We're forcing evolution in the marketplace, whether that be technology of communication. We're causing fees to go lower because it's not the primary business for us. So we have other business lines. We are working to make things much more approachable for the larger customer audience, because it's our responsibility to make sure that things are some level of stability, that some of these are stable for customers to be able to access. So I think it comes together. We come up with a harmonic future, and we move forward in a
So we're all going to
utopian way.
come together and sing in harmony.
I don't think
The
it's
crypto community and the traditional financial services firms will be arm in arm skipping down the road.
It might be a
Or
love-hate relationship.
will we hear some CEOs calling it rat poison, garbage, and then not realizing that their own trading desks are actually trading digital assets?
And creating
Do you-
other coins.
And creating their own. I just wanted to see if you think that's going to continue. Or do you think, we were talking off stage. I think we both got into the industry in the 90s when electronic trading really got going.
Mm-hmm.
Do you think it's going to look like that? Do you think we're going to see, we're maybe in the second inning of this baseball game, and that 3, 4, 5 years from now, we're going to see many traditional financial services firms not just being involved with groups like the Chamber or R3, but actually embracing it as part of the backbone of their business?
I think they're going to have to, although it's really hard as an established player to integrate some of this technology. We've met a lot of really amazing projects that can revolutionize our business, take a lot of costs out, but they're incredibly expensive to integrate. It's like a spine replacement for us. So I think it's hard for a traditional player to adopt and integrate. It's going to be fantastic for an upstart to get involved and really create more efficient organizations. That's going to put a lot of pressure on the established financial system to move down that direction if we want to stay viable. But it's got to evolve over time.
So Al, you ran major infrastructure and networks for the United States government. And
Right.
despite what people say, being an Air Force brat, I will say the military actually is more agile and nimble than people give it credit for. But looking at the closest analogy, I think, to large corporations, big investment banks and insurers and et cetera, trying to figure out, can they actually tear the guts out of their infrastructure and replace it with something new? Or is this something that is going to have to be an evolutionary process that's going to take years to implement that type of technology?
So if you're talking about a very large enterprise, it's going to take years because there's just so much equipment that you'd have to work through. But that doesn't mean you couldn't make some incremental changes to the way you run things. The size of the network I was working had 3.4 million users on it. Had 1 billion attacks a day, hackers. So the two scariest things on a very large network are hackers and then people with elevated privileges on the network, so your admins. Because both, if they don't, well, one's going to try to hack you and destroy something on the network. The other one might make a mistake on the network that could still cause you issues. And of course, all the digital currency, everything that you've got runs on the network, right? So all of it matters, all of it plays. But so how do you bring accountability to that type of a function? So we had about every 6 minutes there was 1,000 changes to the network. Okay, there was all on logs, millions and millions of changes on logs. Now find the needle in the haystack for a problem. So there's some things you care about more than other things. Configuration, for example, the configuration of the system, the devices on the network. You could absolutely use blockchain to create a lock on a good configuration, such that if it's changed, now you know who changed it. Mm-hmm. And you'll be able to catch the admin that did the good thing or not, or you'll be able to catch the hacker because they were not authorized to be in that configuration. So I mean, that's just one example of some of the things that you could use blockchain for. If you wanted to actually track the network and where it went and how some transaction happened, and you wanted to make sure it didn't go to an unfriendly country, let's just say, it would be the truth that you needed all the way through the network to map that, to say, no, it didn't go through that country, so the chances of that hack that you talk about didn't actually happen. It might have been an admin. Go back and look at go back and look and see if that was actually the case. Or just the fact that somebody gets elevated privileges, because a hacker will come into your network and they'll try to get a password and then elevate their privileges so that they can change a configuration on the network, for example, using the same example. Well, if you see the fact that they've gotten elevated privileges and you had blockchained that, well, then you know the change has taken place. And then everybody's informed, then you can go look quickly. And so there's a lot of interesting capabilities that are more than financial, but impact finances on the network.
But I know this is an area of your interest, which I believe is identity.
Right.
And putting identity on blockchain.
Right.
Are we getting to the point where if we start putting identity and information of various types used by the military and health insurers and everybody else on blockchain, not to sound like a fan of sci-fi, but when do, and assuming we have algorithms monitoring all of these changes on the network that you were talking about, because I doubt you had human beings. We're not talking about the Chinese military tracking every change to the network. So you probably had algorithms tracking all of this and looking for outliers and alerts. When do we get to the point where we're using identity effectively? And what are the risks if we're putting identity on blockchain?
Yeah, so I think, so I'll coin a phrase and say that right now everybody's excited about the cloud. I think the next big thing is identity-centric networking, where your identity actually drives what happens on the network and how you interact with the network. Your identity is the thing that gets you on the network. It's actually kind of the original sin of the network, of the internet. Without identity, then hacking became a possibility, because you could be anonymous and run on the network. The loss of PII, the ability to hack into finances, all of that lives because there's no identity. Once you get an assured identity, then you can actually go through the network as a known quantity and you're accountable now. So you get to hack once, and then with assured identity, you have those factors to prove you are who you say you are. One of the last projects I worked on was getting a 7-factor identity on what we thought would be the most ubiquitous device, which is your cell phone. And we had facial recognition, voice recognition, your gait, the assured network, assured GPS, so your location could be fenced. All those things could add up to a score that would be your trust score. And then you would know you are who you say you are. And as you entered the network, then you're accountable for all your actions on the network. So that was going to be the replacement of the 2-factor CAC card or PIV card, for those that know what that is.
So I'm not going to ask how many people in the audience actually believe in permissionless versus permissioned blockchains. I don't see anybody wearing hoodies or metal hats here in the audience. So, but to the panel, is it really a blockchain if it's permissionless? I mean, permissioned? Or is it, are you going to side with the people on the crypto, I would call the crypto orthodoxy side, who believe that a network that is a permissioned blockchain really isn't a blockchain? Just out of curiosity, what do you guys think?
For me, it's a tool to get a job done. And I think that if you have a good use case, you can use it in either way. I wouldn't say that I'm a purist by the sense of even just looking at my responses. I think we're going to hold hands and skip down the road. So you got a good use case, use the right tool. That's how I would answer the question.
Anybody else?
I mean, we think about just permission blockchain. So, you know, operating in large financial institutions, highly regulated, with compliance costs that are still rising, it's hard to imagine in the next 2 decades that will be permissionless. I don't know, maybe in 3 decades, but not in the foreseeable future. So
I'm just tying identity to the application through blockchain, and then you've got what you need to back up anything you want to do, either legally or any kind of accountability. So I think
So we
it's
have a little
kind of like what you said. It has to do with the use case that you've got set for it.
We have a little time, so I'm going to ask, and I don't know if you will be able to answer. What keeps you all up late at night? What are you worried about in working in this space for your own firm or for your clients? You know, what I can tell you what keeps me up late at night and also pays the bills: regulators. That's what worries me, which is my clients are brilliant entrepreneurs. They build something, or they're big banks. They're terrified about reputational risk or being sued or having to go give sworn testimony. But what worries all of you in this space?
I mean, I don't know that I would say worry per se, but I think when I think about adoption, I think human beings are the ones that get in the way of progress. So there are human beings, and I mentioned misalignment of incentives, that don't really like change. They don't really want to change. They like their day job, and they just want to continue doing things the way they've always done it, which perhaps presents opportunities for new startups. But there are plenty of very large financial institutions that don't think that way also. But it would be nice to see more people getting on board and thinking in an innovative way. And I agree with my fellow panelists here. It's not just blockchain. Let's go run and implement blockchain technology. It presents an opportunity for a new way of thinking. So again, we operate in structured finance, which is about redistribution of credit risk. So when you think about automation, tokenization of loans, as well as securities, you can begin to see a path where financial institutions emerge that really want to participate in a very major way in the redistribution of consumer credit risk. And that actually goes to some of the identity technology that is happening today. And it's going to be a very interesting decade to see what evolves and how it evolves.
I think what keeps me up at night is that the world at large is not ready to self-custody their own assets, which means they're going to rely heavily on the financial system, whether that be traditional or upstart financial systems, at least in the near term. And what concerns me the most is that we lose assets, and you have a very high-profile asset loss. If it's a Fidelity or TradeStation or Coinbase, some kind of massive breach there would really deteriorate the trust which financial institutions are based on right now, and that would have a massive negative impact on our progress as an industry.
Al, any concerns?
Yeah, so for me, what keeps me up late at night is the fact that there's literally millions of people that don't have an identity, and there's an opportunity here for us to change that so they could enter the world and make a difference. I'm concerned about the sovereignty of my identity and all of our identity. I mean, our identity is being traded and bought and sold out on the network, and I have no say on that. That to me is very concerning, and we have an opportunity to fix that with identity and blockchain. I think it could be a really big, bold move that we could go for if we just kind of put it together and run.
All right. Lightning round. I'm going to ask you all to put on your Nostradamus hats, show that you're prescient, and predict the future. Which industries do you think by 2025 will most aggressively embrace blockchain? Will it be automotive, aviation, identity, insurance, healthcare, mortgage, shipping and logistics, structured finance, or traditional financial services? Who do you think, Bernadette, is going to be the leader, the vanguard of embracing
I
blockchain?
actually think identity is actually at the forefront, right? I do think, though, that structured finance and other, lending institutions and investors are, I mean, we see it today. It's happening now. It's not actually in the future. It's just a matter of how it will evolve and when it becomes mainstream.
Great. James, what do you think?
So the money right now is flowing into FinTech. That's what is evident in the trends. I happen to think that the companies that stand to lose the most are going to be like the Facebooks, the Googles, and they will do a lot of activity to try to preserve their business model or recreate themselves in the blockchain for survival in the future.
Al?
Yeah, so I have to give kudos to Noop over there because I think that blockchain is going to run into networks here really, really quickly. And that's going to tie to identity. And I mean, IDC did a study and they said that that's going to be a huge growing part of the future. $27 billion in 2027, I think is what they said. So there's a huge future there.
Well, I'm hoping it's the legal profession, so I get to play a little more golf and ski a little bit.
There'll be a lot of legal in that, I'm
There
sure.
we go. So we have time for a couple questions. I know we're at the end of the event, but if you have questions, please raise your hand. There are microphones floating around, but if we don't want to wait, you can just yell out your question, and I will try to repeat it in an intelligent manner. Any questions? Up front, please.
I have a bit of a provocative question. Because we talked through this forum about a lot of identity and the idea that, how do we create as much licit activity as possible on the blockchain to support the financial services and instruments and the things that we can build. So is the fundamental flaw in money that it's fungible? Should all money be non-fungible?
Should all money be non-fungible? Anybody care to take that?
Sounds like a legal question.
Yeah.
I laugh when regulators tell me, oh, we think that, Bitcoin's anonymous or digital's anonymous. I go, actually, it's a pseudonym. And second, it has a wonderful audit trail. Once you crack who the person is, it's pretty easy to track. So if you're planning on being a criminal or a money launderer, I'm not advising you to do this, but traditional currency is probably a better mechanism for doing it. So by that definition, if you're saying that maybe a lack of a change in the fungibility of currency and making it something that's more easily tracked could have some benefits, I think if you talk to the Financial Crimes Enforcement Network, part of the Treasury and other regulators around the world, they might say, yeah, we agree with you. Creating a mechanism where we can track currency movements more efficiently rather than with traditional currency wouldn't be a bad thing. So that may be a bit provocative, but I think they could agree with you. Other questions?
I want to comment on that. I'm sorry. I think that maybe from a regulator perspective, absolutely, but from a person who travels the world, I need a currency that isn't just stuck here in the US. I need to be able to invest in assets that are around the world. If I want to buy an apartment in Tokyo, I shouldn't have to get murdered on the transfer over there. So the mass market demands this, that they have some type of fungibility in their value units.
Fair enough. Other questions in the audience? Up front.
James just mentioned that blockchain is being disruptive to a lot of the current giants like the flag. What do you think they would do to keep their current position, and do you think they would succeed at doing that? Thanks.
I don't actually know what they do. I hope maybe one of our panelists will do, but I think let's look at what they're currently doing is they're aggregating a lot of information and they're using that as inside their walled gardens as their value. So how do they deal when identity and data gets put on the blockchain? They're going to have to figure out how they can monetize that and maybe enable the individual to monetize their data. So instead of Facebook making all of the money on your data, maybe they're sharing some of that revenue with the customer. That is one way that they could engage, but I'm not really sure how they're going to accomplish that.
Other questions? Do we have any other questions? All right. Well, oh, we do have one over there. One last question.
Neil Wasserman from Georgetown University. One of the issues that actually comes up in my class is the localization of the rules governing blockchain. And I wondered if you would have a prediction, if we are to achieve fungibility, interoperability, all those good things, there will have to be some concurrence in terms of the rules of the road, in terms of what is allowed and what isn't. Do you have a prediction on the future of how the global system of blockchain governance might converge?
I think it's very difficult to ask regulators to stop doing what they're empowered by their legislative bodies to do, which is to protect their citizenry, oftentimes to promote financial soundness and market efficiency. I do think you see in various industries, whether it's insurance or the automotive industry or aviation, or in the financial markets like lending and the bond markets, that industry groups do help bring some level of standardization across jurisdictions. And I think that's where we will probably go over the next couple years. But with that, we have to say thank you all very much. Please join me in thanking my fellow panelists. Thank you all very much.